Services and consulting company EY reported record revenue for its fiscal year 2023 at just under $50 billion. It's a boost of about 9% year over year in U.S. dollars, 14.2% in local currencies. And the company also announcing a big investment in artificial intelligence, rolling out its new platform, EY.AI. Ooh, it rhymes. Joining us now to tell us all about it, EY CEO Carmine Di Sibio. Good to see you, Carmine. Thanks for coming into the office here. So it has been a bit of a tumultuous year for you guys. So it's interesting to see this increase in revenue. Talk me through what are some of the things driving it. Tumultuous for you guys, but also like confusing in the global economy, right?
Yeah, so first of all, thanks for having me. It's great to be here. And we turned in a great year. Our year end is June 30th, 14.2% growth in local currency. We really do look at it local currency based because we operate in 150 different countries. And so all our businesses have had tremendous growth during the year. Now that growth has been slowing. Consulting has been slowing. So our year end is June 30th. Some of our competitors' year ends are May 31st. They had the benefit of one less month of slowing down. So for us, it's been a great year. It's been a year where we've learned a lot about our organization. As I'm sure you know, we were looking to do a transaction, which we call Project Everest. That did not work out, but we learned so much in terms of where our business needs to go going forward. And you could see the strong results, and we'll have strong results going forward as well. What drives our results is really the environment and the economy and change, in particular change in technology. As companies need to change, that obviously fuels growth for us. And so you could see that in last year's results, and you'll see it in the upcoming year's results. And so with that, we're helping companies transform themselves using technology, and that's been a big piece of the growth.
In the absence of that transaction that you were looking for, then how does that facilitate further change at EY in this near-term period? How do you think about kind of that next layer of growth for the company while also perhaps right-sizing what the organization may look like even as you're marching towards some of those goals?
Yeah, so we're not looking to really right-size. I mean, our strategy continues. We have 4 businesses globally. That's strategy and transaction, tax, assurance, and consulting. All 4 of those businesses are doing extremely well. We'll continue to invest in all those businesses. Today, our strategy and transaction business, our strategy business is doing really well. Transactions are down, so that's not doing as well as we had hoped. But even that business is still growing. It's just not growing because the volume of transactions are down. And so for that to change, we are going to need the environment to change. And the economy to change because we need more confidence in terms of people doing transactions going forward. But in terms of our strategy going forward, it's investment in all 4 of our businesses, globally oriented, and investing in our people, and obviously technology and AI.
I want to get into AI, but I want to dig a little bit deeper into sort of the tea leaves, if you will, particularly in those transactions. You're right, we've got ARM pricing after the close. We have some other green shoots, if you will, in the IPO market. We've had a little bit of transaction activity, for example, Smucker and Hostess brands being announced. What are you seeing in terms of transactions? And you said the conditions are going to have to improve. What specifically do we need to see for that activity maybe to start to pick up?
Right, so you're seeing some of this in the environment now. Everyone's talking about a soft landing. The issue we see, though, is that we're in a holding pattern. Soft landing maybe is coming, but we're in a holding pattern. And when you're in a holding pattern, everyone is hesitant to really push forward with major investments and push forward with transactions. So the fear of inflation continues. The latest thing I saw is inflation in August is up because gas prices were up. But the Fed and the central banks have to make a move until the environment is confident that the Fed will stop raising rates and will start cutting rates. The transaction market will not move forward in a big way. So for this, there's a lot of pent-up demand. There are a lot of companies getting ready for transactions. But in terms of really moving it forward, it's going to need the Fed to stop raising rates. Sure, they could be doing nothing for a little bit, but then it has to start cutting rates.
You would think that this would be a huge year for your consultation services, considering the amount of talk, investment around artificial intelligence. So where have your customers been kind of knocking on your door, picking up the phone and trying to schedule meetings just to wrap their heads around what that could mean for their business?
Yeah, so we are doing a lot in artificial intelligence. We've invested $1.4 billion already in terms of putting together platforms, and I'll explain that in a second, and we will invest billions of dollars going forward. So the way we look at AI, Brad, is pretty simple. We look at it in three different segments, okay? Segment number one is how do we help our clients really put in AI to improve their businesses, to help grow their businesses. And so in that space, we are doing over 100 use cases with clients around the world using AI. And we've broken that down by sector because we want to make sure our use cases are beneficial to an entire sector, not just one company. That's the way we're going to invest in. So these are, in financial services, we're doing use cases in terms of financial advisors and how do you use AI as opposed to people in terms of financial advisors. And there's a slew in all the different sectors from that perspective. So that's one segment. The other segment is how do we improve our own business using AI? So obviously for us, that'll mean a lot of change in terms of our processes and a lot of change in terms of how we're using technology and how we're using technology and people together. That should make our business more profitable. It should also make our business more efficient, which we will obviously pass on to our clients as well. The third segment is how do we help the world utilize AI in a good way? And this is something that we're very passionate about. And there's different groups that are forming and so forth. And the tech CEOs are down in Washington, D.C. on the Hill today. But my belief is that I think from a U.S. perspective, I think actually the administration needs to put together a presidential committee on AI. And it needs to include business people, tech people, academics, government people, to really look at how we need to move forward and move forward in a good way, where AI is responsible, where AI is not biased in any way. And I think the U.S. can do this. In Europe, what's happening there is they're moving very quickly towards regulation. And what that does is it really stifles innovation in Europe, where I think the U.S. is moving slowly towards regulation, very slowly, but I do think it needs to have some parameters in terms of where AI is going. So we are trying to facilitate this. We're trying to facilitate this around the world. Our people are involved in many different committees around the world to make sure that AI is used in a good way. So this is how we look at it in three different segments. We appointed a global head of AI. His name's Nicola Bianzino 6 months ago. Mm-hmm. So we want to make sure everything is centralized and we're very organized. We're in 150 different countries. We have over 400,000 people. Mm-hmm. So that's going to be important.
Yeah, most definitely. Carmine, thanks for coming in. It's good to see you in person.
Thank you. It's great to see you all.
Here. Carmine Di Sibio is EY CEO.